From coast to coast, here's what's driving commercial finance markets this week. I'm Trevor Damien with CLS CRE, bringing you the latest updates impacting interest rates, Fed policy, and the bond market. Federal Reserve, wait and see mode amid tariff turbulence. The Federal Reserve officials are urging patience before making any rate changes. With new tariffs shaking up economic projections, the Fed is holding its benchmark rate steady, signaling they need more data before making the next move. We're not out of the woods yet, Waller said Thursday, referencing global uncertainty. Translation, rate cuts may be delayed further into the year. Source, Reuters. Capital fight concerns weight on U.S. equities. Even after President Trump reversed course on recent tariff threats, global fund managers are pulling back from U.S. markets. This signals growing anxiety over Federal Reserve independence from political interference in monetary policy. What does this mean for CRE? Volatility in capital markets could drive spreads wider, especially for floating rate borrowers. Source, Wall Street Journal. Dow poised for worst April since Great Depression. The Dow Jones is on track for its worst April since 1932, shedding over 1,200 points this month alone. Analysts blame mixed messaging from Washington, economic uncertainty, and speculation over potential Fed leadership changes. This kind of volatility historically nudges lenders to reprice risk, making rate locks more valuable in today's environment. Wall Street Journal. Bond market awakens. $4.5 billion buyout single loans signals return of LBOs. Goldman Sachs just kicked off a $4.5 billion debt raise to back QXO $11 billion acquisition of Beacon Roofing. This is the first major LBO financing since the latest tariff rollout, and is being closely watched as a proxy for credit appetite. Private debt and bond markets are slowly reopening. Good news for larger CRE sponsors with institutional backing. Wall Street Journal. REIF rally continues, but for how long? Markets bounce back for the third straight day as fears over tariffs cooled. For now, the Dow cloud back 400 points Thursday, but analysts say it's likely a technical rebound, not a return to stability. CRE borrowers should stay cautious. Rate movements remain headline-driven and unpredictable. Wall Street Journal. That's a wrap for this week. If you're navigating a rate-sensitive deal or looking to capitalize on market dislocations, CLS CRE is here to help you structure and place your next loan. Until next time, stay informed and stay competitive. CRE Daily News reports the Palisades Indian fires in LA impacted 1.9 billion of commercial property, primarily multifamily and retail. 4.5 million square feet of property was directly affected, with another 23.6 million within evacuation zones. The Mortgage Bankers Association reported that activity remained relatively unchanged last week. According to their latest survey, while purchase applications saw a slight increase, this was offset by a decline in refinancing activity. Despite interest rates hovering at nearly 7%, purchase applications remained 2% higher than this time last year, indicating continued demand in the housing market. Movements in the yield curve, we've seen very little movement, just slightly up in the past month on the 5, 7, and 10-year fixed. See you next week.